Hey everyone, and welcome. Today we are cracking the code on a really fascinating tool that tons of traders swear by for making sense of the markets, Fibonacci. So let's just dive right in and see what all the hype is about. So here's the big question for any trader, right? Are the charts just complete chaos, a random walk? Or is there some kind of hidden pattern, a rhythm that we can actually tap into? Well, a lot of traders believe the key lies in a mathematical sequence that was discovered hundreds of years ago. And that kicks off our first section. We're going to look at the secret of Fibonacci. Seriously, how did a set of numbers that pops up all over nature, we're talking everything from flower petals to spiral galaxies, somehow find its way right into the heart of the financial markets? So, way back in 1202, an Italian mathematician, Leonardo Fibonacci, introduced this sequence to the Western world. And the rule is so simple it's almost funny. You just add the last two numbers together
of the
to
two
get the
numbers
next one.
before them.
But the pattern that comes out of this simple rule is, well, it's pretty incredible. Okay, but here's where things get really interesting. That simple sequence leads us to this magic number, 1.618, often called the golden ratio. See, if you take any number in the sequence and divide it by the one right before it, you get closer and closer to 1.618. This ratio is literally everywhere, in ancient architecture, famous works of art, even in the proportions of the human face. And yeah, many traders believe it governs the markets too. So how on earth do we go from a number sequence to something we can actually trade with? Well, it's all about the relationships between the numbers. By doing some simple math, dividing numbers in the sequence by others, we get these key ratios you see right here. These percentages, they are the absolute bedrock of all Fibonacci trading indicators. All right, let's get into the practical stuff. When you're trading, there are two main Fibonacci tools you're going to hear about all the time: retracement and expansion, which some people also call extension. You know, the easiest way to think about it is this. Retracement helps you figure out where to get into a trade. Expansion helps you figure out where to get out of a trade. One is for your entry, the other is for your exit. It's really as simple as that. Okay, time to roll up our sleeves. Let's walk through exactly how you draw the Fibonacci retracement tool on a chart, using something like TradingView, so you can start spotting those potential entries. First things first, and this is absolutely crucial, you have to find a clear, obvious price move, what we call a swing. Once you've got one, you grab the tool. Now, if it's an uptrend, you click on the very bottom of that move, the swing low, and you drag your mouse all the way to the very top, the swing high. For a downtrend, you just do the opposite. And boom, here's what that looks like on a real chart. See? We found a nice clear uptrend, we anchored the tool at the absolute bottom, and stretched it to the absolute top. The software then does the magic and projects all these important Fibonacci levels right onto our chart. Now, these horizontal lines are your potential buy zones. They act like support, showing you where a price pullback might just lose its steam, find some buyers, and then turn around to continue the main trend. And pay special attention to that 61.8% level. It's called the golden retracement for a reason. It's a huge level that tons of traders are watching. Okay, so let's imagine you did it. You bought the dip at one of those retracement levels and it worked perfectly. The price is bouncing. Awesome. The next question is, where do you take your profits? Well, that's where our second tool comes into play. Now, drawing the expansion tool is a little different. It takes 3 clicks, but it's easy once you get it. First, you click the swing low, where the whole move started. Second, you click the swing high, where that move peaked. Then, for the third and final click, you go to the bottom of the pullback, the exact spot where the price bounced. And here is what that gives you. Based on those 3 points you just clicked, the tool projects potential profit targets above the old high. These levels, especially that 1.618 extension, are perfect, logical places to think about taking some money off the table. So, what's really going on with these Fibonacci lines? Let's connect this whole idea to a core trading concept that you probably already know and use: support and resistance. You can almost think of Fibonacci as a way to predict where these important zones might show up. So a super quick refresher just in case, support is a price level where buyers tend to step in and push the price up. It's like a floor under the price. Resistance is the total opposite. It's a price ceiling where sellers take control and push the price back down. Now look at this comparison. On the left, you've got your traditional support and resistance, which you draw by connecting old highs and lows. It's a reactive method. You draw it after the fact. But now look at the right. We've laid Fibonacci levels over the same chart. See how they often line up? The big difference is that Fibonacci gives us a proactive guide to where these zones might appear in the future. It's like a cheat sheet. And this is so important, I can't stress it enough. Whether you're using Fibonacci or just drawing lines on a chart, these are not laser-precise single price points. They are always zones. You have to think of them as areas of interest where the real battle between buyers and sellers is happening. And finally, the most important rule in all of trading: always have a stop loss. No excuses. And that kind of leaves us with this big, fascinating question to chew on. Do these levels actually work because they tap into some kind of hidden mathematical code in the markets? Or is it just a giant self-fulfilling prophecy that works simply because millions of traders around the world are all looking at the exact same lines and placing their bets accordingly? It's something to think about. Thanks so much for tuning in.